Jordan, very good to see you. We are diving into the headlines today, what the big, beautiful bill means for your retirement. Washington recently passed what President Trump is calling the big, beautiful bill, which could reshape retirement planning for millions of Americans. I want to start big picture here. What do we need to know?
Yeah, a lot of changes. We got a 1,000-page document of this
Yeah.
bill. We're not going to go over that in this entire video, but basically changes on no taxes on tips, no taxes on overtime, extension of the 2017 Tax Jobs and Cuts law that was put into place.
Mhm.
A lot of changes, a lot of big impact for a lot of people.
Before we get into the extension of the tax cuts, which is probably the biggest headline, I do want to ask, because there were some confusing headlines regarding the taxes on Social Security. The agency framed the new $6,000 senior tax deduction as eliminating taxes on Social Security, but experts say it's not that simple. Can you explain?
No, it's much more complex than that. So basically, if you're over 65 for the next 4 tax years, not permanent, but from 2025 to 2028, if you're over 65 and depending on a single or a married status, single you get 6,000, married you can get up to 12,000. They'll give you more deductions. The problem with this is if you have more income, you start to phase out of those deductions. And if you have higher income for a married over 250,000 or for a single over 175,000, you actually get none of those deductions. So it's not a very clear and simple no taxes on Social Security. It's an extra benefit, yes, but if your income's too high, you will not see that benefit.
I think that begs the question, though, Jordan, does this change the strategy around saving for retirement or when to claim Social Security?
It shouldn't change the strategy. If you have a good plan in place, and we like to create these detailed plans with our clients' goals and interests in mind, you should really keep on evaluating that and not really deviate everything from this new tax bill, but keep on reevaluating and maximize those Social Security benefits. Obviously, we want to get the biggest pile from Social Security. The longer you wait, the more money you can have. But we also have to overlay that with your financial plan, your personal preferences, and your health. Because if you don't have good health, we might actually even take Social Security sooner just to get the most out of it.
Yeah, the answer is going to be different for everyone. So let's circle back to the big takeaway, which is the extension of the 2017 tax cuts. Why is now still a good time for a Roth conversion, and why are Roth accounts so powerful?
Yeah, if we look at the big screen of time, we are historically in very low tax brackets. We go look at this chart, we go back to like the 1970s, we go to 1945, 1980s, 70% tax brackets for the
Yikes.
highest tax bracket. This is insane, where a lot of people complain about taxes, but relatively speaking, we're in pretty low historical tax rates. So what this tax bill did is it said, hey, it's permanently going to make this change in the tax rates. Now, we all know, not to get political, but we all know, depending on the next president, tax rates could change again.
Right.
And on a personal belief, I don't think these tax rates will be permanent forever because life changes. As you saw over the last, 100 years of tax history, things continue to change and the government needs money. But right now is the opportunity, while we have these lower tax rates, at least for the next 3 or 4 years, let's take advantage of this. Maybe we do some Roth conversions. Pay the taxes while they're historically on sale, then that grows tax-free forever, and we don't have to actually worry about what that next tax rate may be in 5 or 10 years from now, because I personally do not foresee taxes going lower from this point forward.
No. Have you seen the national debt lately?
Spiraling out of control. We need to pay it down at some point, and eventually things can't keep the can down forever.
Yeah, I agree. Well, Jordan, if somebody would like to talk through how this bill may affect them, if they want to talk through claiming Social Security, when is right for them, or Roth conversions, what's the best way to reach you?
Yeah, I'll say already for our clients who've already adapted this and are doing this in our tax planning meeting at the end of the year, we actually have a tax presentation by some of our accountants to go over the more high level, most effective changes to this tax bill. But if we want a one-on-one, we've never talked to our firm before, they can call our main number, 847-499-3454. See if we have a conversation, see if we can understand your goals, your plan, and tailor this new tax bill to what you're trying to accomplish.
Great. And then just to remind everybody to get your phones out because we do have a QR code as well coming up at the end. Jordan, thank you so much for your time.
Thank you, Aaron.